Hey everyone, welcome to Financial Revelations. I am David Safransky. You can see me at SkiBucks1 on Twitter. You can email us, Corey@epsf.com if you have a question. I'm on WCRF every Thursday morning from 8 a.m. to 9 a.m. where we take live questions, goof around, joke a little bit. That's WCRF 103.3 in Cleveland, Moody Radio, and you can get their app. It's a great show. I love doing it. Also, NativoSUSA.org for the well dig missions that we go on. We do have a fundraiser for the next well mission trip. It's going to cost about $12,000 US to dig the well. Now, we raise money in a variety of ways, but we have a GoFundMe going right now for that. If you'd like to be a small part of it, every little bit helps, and that is the truth. So we're going to post the GoFundMe on this video, but if you're listening and you go to GoFundMe.com, you could just type in my name, David Safransky, and it'll pull up the mission to dig a well in the Amazon. And again, any amount helps, and we thank you for doing that in advance. I'm wearing a shirt today made by Suit Supply. It's got this California roll-top collar that I love. You don't see it a lot. It's kind of unique. But anybody, they don't sponsor me or anything. I just love this shirt, so I thought I'd tell you about it. So here we go. Chair Powell spoke a lot today. But first I want to talk about bonds. I just wanted to say Chair Powell, but I am going to come back to it. And I am going to tell you, I'm going to give you some pointers on how to invest in a recession. We've been talking about a recession for a long time. It's true. And with the way rates are spiking, I think it's going to happen in the first quarter, maybe the end of the first quarter. I think what's happening, and we're seeing it now, mortgage rates are plus 8%, but the employment market has not capitulated yet. It is still at 3.7% unemployment, and until that's above 4%, the Fed has a green light to raise interest rates. And I think it's very possible that they will in November or December. It's also possible they won't because of what's going on in Israel right now. But last week I said Hezbollah had invaded. It's not Hezbollah, it's Hamas. Hezbollah is up north, and there are threats of a two-front war happening if Israel goes into the Palestinian territory. That would be dramatic, and it would most likely drag the United States into it in some way, and that's why we have moved 2 carrier groups into the region, because we're going to need them. If that happens, they're going to need to be there. We're going to fly off those decks. We're going to launch Marines off those decks. We will be in it. You know, one thing that didn't happen, I know I've talked to a lot of people about this recently, but a couple of things that didn't happen under Donald Trump. And I know you might not have liked Donald Trump's personality, but you know what? Just stop already. Nobody, if he mean tweets or he says something mean, I don't really care, because we weren't involved in wars. People were afraid of the United States, and they're not afraid of the United States right now. You know, the Biden administration has given $1 billion to the Palestinian Authority since they got into office. Donald Trump had stopped that money from going to them. And even as they're giving them the money, even as the Biden administration is giving the Palestinians the money, they say, well, we know it's totally possible that Hamas is going to get some of this money. It's unbelievable to me that we're seeing this happen when it didn't happen last time. And I do think the election was stolen. And I'll tell you how I think the election was stolen. Mark Zuckerberg and people like him went out and they gave hundreds of millions of dollars to organizations to go get access to voter rolls that was illegal. And so they knew whose ballot to go pick up and whose not to go pick up. And they did those things. So everybody got a mail-in ballot during COVID, and just Zuckerberg's alone gave $400 million to organizations and states to go pick up Democrat votes. That is, and they had access to rolls that nobody should have had access to. It's not public information. To me, that is stealing the election. That's taking something that doesn't belong to you. So when Hamas invaded It's suppressed rates dramatically. The 10-year was at 4.88%. It went down to 4.6, even dipped below 4.6 for a couple of days. I got phone calls from people saying we need to buy bonds, and I told them to wait. We got to wait, because whenever there's these meteoric rises or falls in anything, it's usually going to revert back to where it was. And rates are now higher today than they were before the invasion. So not only did they revert back, they went higher. We're going to get a 5% 10-year Treasury probably by the end of next week. And if a second front opens up in Israel, we're going to get a 6% bond probably by the end of next month. So I know I told you to wait before, but there's a couple of reasons why I think rates are going even higher. First of all, there's scheduled to be record issuance of bonds next year. We're running a budget deficit in full employment. What do you think it's going to be like when we go into a recession? This is not good. It's not good. So record issuance of debt next year. Also, the Treasury Secretary came out of her lane of expertise and talked about war and how, it's no problem to finance 2 wars at one time, while we're running a 6% budget deficit and at $33 trillion of debt. Well, the market said, we don't agree with you, and we're going to show you. And immediately rates spiked when Treasury Secretary Yellen spoke. When she was the Fed chairwoman, one time somebody said, do you think, this is an actual question at her first press conference, do you think biotech stocks are overvalued? And she said, yes, I do think they might be a little overvalued. She solved that problem, because by the end of that press conference, they weren't overvalued anymore. That's how the market takes the things that some of these people say. It digests them and lives off of that. So if she comes out and says, oh, we spend the money, no problem, the market says, well, we're going to show you. And they did. The administration's commitment to stupid is just extraordinary. They're in a desperate fight with the Fed. It's a tug of war that they can't win. And the Fed is about to show them why. Rates are skyrocketing in the market, and the Fed's about to jack rates again. It's just not tenable. And instead of telling the administration, and maybe they're doing this behind closed doors, we don't know, but somebody needs to tell the administration, you cannot spend this kind of money. It's not free. Now, they're trying to cancel student loan debt again. They said, well, we're going to cancel the debt. Well, there is no cancellation of debt. It's just a transfer of who owes the money. So they took it from students who took it out willingly and transferred it to the American taxpayer. And what they should do is confiscate. If they're going to be communist, be communist. Confiscate the endowment funds of places like Harvard, Yale, Brown, Oberlin, Ohio State, Michigan. Confiscate those funds and pay the student loan debt off. In a lot of cases, the colleges are allowing students to take these stupid degrees where there's no employment opportunity. I'll let them stay in college for 6-7 years while they're collecting money. I don't care. Make them pay, not you. You owe that debt now. That's on you and me and Corey. It's on her. That's not fair to do. So I'm going to recommend right now, instead of going wholesale into the bond market, I'm waiting, okay? And I'm going to recommend that you wait it out just a little bit longer. How can you wait it out but still make some money? You could buy a short-term U.S. Treasury. It's earning over 5%. You could buy a high-yield money market. Now, in a taxable account, that interest is all taxable to you, so that's why it might make sense to buy a 1 or 2 or 3 month Treasury, because you don't pay state and local income taxes on that, so you get a tax break. If you're in an IRA, probably just buy the money market because they're paying 5.4%. Taxation in an IRA happens when you take the money out of that tax code. So anything you do in there, no taxes. So I'm going to wait until November, December timeframe before I go long, and we're going to evaluate the bond market. If it looks like rates are going higher, I'm going to wait it out, because what we want to do is we want to buy as close to the top of the interest rate cycle as we can. We're not going to hit it exactly, most likely. It's like a hand grenade. You just got to get close. Just got to get close, because what I think is going to happen is we're going to go into next year. We're going to have a recession in the first quarter. The Democrats are going to lose the presidential election. A Republican's going to get elected. I think it's going to be Donald Trump, most likely. Then after that election, the Fed's going to come back and they're going to lower rates to what they call their terminal rate, where they want them long term. And I think that's 1.5 or so below where they're at right now. And that equals profit, double-digit profit in a long-term bond. So we could earn double-digit rate of return in long-term bonds in the next couple of years. It's entirely possible. Now, as always, there's no guarantees. I don't know for certain that this is going to happen, but this is what I've done for a living for a long time, and I think that's what's going to happen. But if you have a financial advisor, talk to your financial person about this. If you don't have one, find one. If you don't know what to do, find somebody who does that can walk you through this. But don't put all of your money in any one thing. Don't just take what I say and run with it like gospel, because your individual situation is going to be different than mine or the way that we manage money. So I want you to use this information judiciously, okay? Now, last week I told you we were going to talk about how to survive a recession in investments, and I fully intend to do that right now. So what do you buy? What do you look for? What do I look for? Let's say that. What do I look for as investments in a recession? Well, the first thing there's really 4 things I'm going to look for, and one is a pretty new thing. Okay, so the first thing that I look for is I look for the trade down stocks. So we have this grocery store by my office. It's expensive. It's expensive. You go in there and a yogurt there is $1 more than a yogurt at a discount store. Well, in a recession, people shop away from those places. So I like places like Walmart for a trade down stock. Now, I know Walmart does a lot of business, but they attract a lot more business in tough times because they do have lower prices than most places. The scale that Walmart buys products at is something like we've never seen before. They are the largest grocer in the United States. They're the largest organic grocer in the world, Walmart. Now, if you go to South America, there's these stores called Carrefour, and they're kind of like Walmarts. They're about the same size, but they have a lot of cheap Chinese stuff. I mean, the stuff that even China can't sell here, they sell there. So they got the kind of towel at a Carrefour where you could dry off with it for an hour and you're still wet. That's the kind of stuff that they sell. I don't want to trade down to that yet, but Walmart is a great trade down stock. It's an idea that I like. I also like the dollar stores. Dollar General is one that has been beat up lately. They got a new CEO. They got a new outlook. They could be a good trade down stock, or Dollar Tree. I also like TJ Maxx. The reason why I like TJ Maxx so much right now is because now, I'm not recommending that you buy these stocks. I'm just giving these to you as an idea of trade downs that we have used in the past. But TJ Maxx is kind of particularly interesting because after the pandemic, there was a lot of unbought merchandise. And it goes to TJ Maxx and Marshalls and places like that. But TJ Maxx is a pretty well-managed operation, and I like them. So I look for trade downs. So places where, like, most people aren't going to ever buy Louis Vuitton. In a recession, the people that were going to buy Louis Vuitton are going to buy it anyway. So that's no one's going to trade away from Louis Vuitton. And by the way, I think Louis Vuitton's kind of an IQ test. Okay, so if I see you in an airport and you've got 4 Louis Vuitton bags, you failed the test. So what I am looking for, though, is that mid-market where, the middle to lower, maybe lower upper class, socioeconomic-wise shops at, well, they are price sensitive. So places that are price sensitive will be shopped away from, and people who are price sensitive will move to the lower price things. Even if they don't love the brand, they will do that. So that's my first one. And then the next thing that I look for is what I call the have-tos. You got to have gas. You got to have oil. You got to have diapers. You got to have soap. For heaven's sakes, I hope you got to have deodorant. You got to have laundry soap. These are things that you got to have. And so companies that produce these things, if you go down the soap aisle in a major store, like a Walmart, you'll see like 40 different kinds of soap and laundry detergent and dish soap. It's made by 3 companies. And they have different price points and different features to them. Some have moisturizing. So I don't know, do people really wash their own dishes? I actually like to wash dishes. It's very cathartic for me. I like to fold laundry too. I don't want to fold yours, but I'll fold mine. And I have a way to fold it. I don't let anybody fold my laundry. I got to fold my own laundry. It's just better to do it that way. And it's cathartic for me. So those have 2 things. People tend to have what we call less price elasticity. It's an economics term that means as prices go up or prices go down, demand doesn't really change that much. If something's very price elastic, if the price moves up a little bit, demand drops off. If it's inelastic, price moves up, demand stays the same because it's a thing that you need. To people, and I'm going to use Louis Vuitton a lot as an example, but people do not need Louis Vuitton. For some reason, they want Louis Vuitton, and they're willing to pay $3,000 for a carry-on. True story here. I was in Hawaii with my wife. We walked by a Louis Vuitton store. Her favorite color is orange, if you're looking to buy her a gift. And there's a small carry-on bag in the window. She goes, "Oh, I like that." I said, "That's $3,000. She said, "No, it's not." And I walked in the store. They wouldn't let me touch the suitcase. A lady came over with white gloves, and I said, "You don't need to open anything up. How much is it?" It was $2,995, $2,995. And my wife was on the other side of the window, and I said, "I told you!" We buy our luggage at Costco. You know I love Costco. Costco would be a great trade-down stock, by the way. The other thing that I really like in the midst of a recession is the early trades. And the early trades to me mean there are going to be some stocks that are really good names that are really beat up in the recession. I'm interested in those names. They're beat down stocks. You know, they might be very price sensitive stocks, but in a good economy, they do well. And the stock market will come out of recession 6 months before the economy does. So you got to buy those things early. You got to buy them when they're beat up. In February of 2020, February 19th was the last day before the market fell into the pandemic. I was telling people, whatever gets beat up the worst is what I want to buy. We made so much money in the pandemic. It was almost like stealing. The beat down stocks, the things that are beat up, the best names that are beat up the worst, I'm really interested in. And the fourth thing that I'm really interested in on the front end of a recession, which is where I think we're at, is bonds. I am so sick about talking about bonds. I dream about bonds right now. I talk about them so much. And, you know, to a lot of people, they're a brand new thing because we haven't been able to invest in them since really 2008. And there are some muni bonds that are worth owning. They tend to have longer maturities because a lot of them are triple tax-free, federal, state, local. If they're always federal tax-free. If they're in your state, they're state tax-free. And if they're in your county, they're local tax-free also. So there could be some value in there, but the credit ratings in municipalities aren't that great. So I think on a tax-adjusted basis, I could probably do better in a mid-grade corporate bond right now, and that's only going to get better. So I love bonds right now. Now, one of the things that bonds allows me to do is to lock in a yield, because whatever interest rate you buy that bond at, that's what you're getting. And that doesn't change. Now, if rates go back down, which they will, the value goes up. Remember the teeter-totter. You have yields on one side, values on the other. They don't move in the same direction. So as yields go up, bond values go down. As yields go down, as the Fed lowers rates, bond values go up. That's where I think the double-digit rate of return is going to be in bonds in the next couple of years. And I got to tell you, and I'm not bragging about this. It's a fact. But on this podcast and on the radio, we talk about financial concepts sometimes 3, 4, 5 months before it hits the general public. And then, you know, that's just experience coming into play, watching what's happening in the markets, reading a lot, doing a lot of research. I read a lot of research, so inevitably some of that bleeds into my opinion, but it's not the only thing that forms my opinion. My goal for people is to, one, make money, because the more money you make, the more you're going to give away, and you'll support the Amazon trip, which we do every year. And you're welcome to come if you'd like to go, by the way. You got to let me know. I probably want to talk to you first before we let you get on the plane, tell you what you're in for. But also, I want to make people money, but I don't want it to be gimmicky. I don't want to scare people into doing things. I'm not selling gold here. Okay, we're not selling anything. People can call me and ask me a question, and I have no skin in the game, and you could go on your merry way. That's fine. I like meeting that need for people. I am David Safransky, a real American, a true red-blooded, gun-loving patriot, and the voice you can trust.